Steve here. You ever pull up a chart and it just looks like a total mess? A sea of indicators, a bunch of noise? Well, today, we're going to cut right through all that. We're going back to the absolute basics, looking at nothing but the raw price. Because believe me, hidden in all that chaos is a simple, beautiful structure. And once you see it, it's going to change the way you look at the markets forever. And this right here, this is the whole key. We're going to take that chaotic scribble and turn it into a blueprint. I want you to start thinking of the market like a house. It's got solid floors that hold the price up, and it's got ceilings that stop it from going higher. Your job as a trader is to become an architect, to see these structures. You get this right, and you're already light years ahead of everybody else.
All right, so let's start with the foundation, right? The very first piece of the structure you absolutely need to learn how to spot is what we call support.
Okay, that's the textbook definition. But what does it really mean? Look, support is just a line in the sand. It's a price where a whole wave of buyers steps up and says, nope, this far and no further. It's where the market decides, together, that at this price, this thing is a bargain.
And this is truly the best way to picture it. It is an invisible floor holding the price up. And why is it there? Well, it's there because a big group of traders decided, hey, at this level, it's a great deal. So they put their buy orders in, and all those orders together, they create that floor.
So let's make this real. Look at today's MES chart. See this 69.12 level? That's not just some random number, my friend. See how the price came down to it once, twice, 3 times, and every single time it got bounced right back up? That is not a coincidence. That is a massive signal that there's a ton of buying interest right there. That's our floor.
Now here's a pro tip for you. Do not think of support as a single razor-thin line. It's not a sheet of glass. Think of it more like a thick concrete slab. It's a zone. And the more times price bounces off that zone, the stronger it gets. For a beginner, this is your safe space. You do not want to be selling into a fortress like this. You want to be looking for reasons to buy off of it.
All right, so if we've got a floor, it only makes sense that we've also got a ceiling, right? This is the other side of the coin, and we call it resistance.
So if support is where the buyers are having a party, resistance is where the sellers show up to shut it down. It's a price level where the bears, they finally wake up and say, all right, that's high enough, and they start hammering the price back down. They're the bouncers, and they're not letting the price get any higher. And this glass ceiling analogy, it is perfect. Just imagine the price trying to punch through, and there's just a wall of sellers waiting with their orders ready to smack it right back down. They create this massive barrier.
Think of this slide as your cheat sheet. Down at the floor, the buyers, the bulls, are in charge. Up at the ceiling, the sellers, the bears, are running the show. And let me tell you, the number one mistake I see beginners make is buying right into that ceiling. It's like trying to run full speed into a brick wall. Don't do it. You have to be patient. You either wait for the price to break clean through it, or you wait for it to pull back to the safety of the floor.
So, we've got our horizontal floors and ceilings. That's great for sideways markets. But what happens when the market is actually on the move, up or down? That's where trend lines come in. This is our secret weapon for navigating a market with direction.
You know, a trend line is really just a floor or a ceiling that's slanted. In an uptrend, it's a rising floor. It's like a moving safety net that catches the price every time it pulls back. Think of it like walking up a staircase. You take a step up, you rest for a second, then you take another step up. That trend line is the step you're resting on.
Okay, pay attention because this is where a lot of newbies get it wrong. They draw these trend lines that are pointed straight to the moon like a rocket launch. But here's the reality. A trend that steep is just not sustainable. It's going to burn out. What you're really looking for is the Goldilocks trend line. Not too steep, not too flat, but just right. That nice, steady 45-degree angle, that's your sweet spot. So we've covered the basic building blocks. You've got your floors, your ceilings, and your diagonal trend lines. Now it's time to put it all together. This is where we go from being a handyman to a master builder. This is the secret sauce that the pros use. It's a beautiful concept called confluence.
Right. So how do we take all these separate little puzzle pieces and actually turn them into a high-probability trade setup? Because at the end of the day, trading is a game of odds, and our job is to stack those odds in our favor as much as possible.
Confluence is all about the power of the word "and." See, having one reason to take a trade, that's a gamble. Having 2 reasons, okay, that's a decent bet. But when you have 3 or 4 or more reasons all pointing to the exact same price level, all screaming buy at you,
Well, that's when you've got a real, high-probability setup. It's about stacking the evidence.
So let's walk through a perfect example. Let's say the price is in a nice uptrend. It pulls back and touches your rising trend line. Okay, that's reason number one. But wait, you zoom out, and you see that at that exact same spot, there's a strong horizontal floor, a support level. Now you've got two reasons. And then, right on cue, a perfect bullish hammer candle prints, showing a huge rejection of lower prices. My friend, that's the trifecta. That is an A-plus setup.
And this quote, it just says it all, doesn't it? With Confluence, you're not just standing on a flimsy wooden floor hoping it holds. You are standing on a foundation of steel-reinforced concrete. The chances of it breaking are slim to none. This is how you find your edge. This is how you trade with real confidence. So there it is, the blueprint for seeing structure in the markets. It's not about some fancy, complicated indicator. It's just about training your eye to see this invisible architecture of price. So now, go. Open up a chart and start looking. Find the floors, find the ceilings, and most importantly, find those areas of confluence. This is Steve, signing off. The market is always talking to us. We just have to learn its language. I'll see you at the open.